yesterday, Tanla Platforms announced that's all set to acquire a company called ValueFirst India for about 346 crore rupees. ValueFirst is India's third largest CPaaS player. CPaaS basically stands for Communication Platform as a Service. Not just that, Tanla also is all set to acquire ValueFirst West Asia business. To discuss the transaction, the rationale behind this, we're now joined by Uday Reddy, the chairman and CEO of Tanla Platforms, to take some questions. Uday, morning, and thank you very much for joining in. This is Rima here. Congratulations on this acquisition. With this, you become even stronger in the India CPaaS market, and it opens up more opportunities for you in Middle East. But there are some concerns on the margin front. Can you tell us first, what are the margins of ValueFirst, and will this acquisition dilute Tanla's reported margins?
Thanks, Rima. A pleasure to be here. Let me first explain the highlights of the acquisition. This is the largest acquisition for us. ValueFirst has been the leading CPaaS players in the last 2 decades with a deep domain knowledge. We are acquiring ValueFirst from US headquartered Twilio, the global leader in CPaaS. We have a very strong relationship with ValueFirst and Twilio for many years. The revenues of this acquisition is around 950 crores. The net incremental revenue would be around 650 crores, as ValueFirst is an existing customer of ours. The EBITDA for this acquired entities is around 50 crores. The purchase consideration is around 350 crores, all in cash, and we are funding it from our internal accruals. We are incentivizing management team for performance and retention with a 50 crore RSUs for 2 years. Overall, it's very attractive acquisition from a valuation point of view. We are acquiring at a 7x multiples of EBITDA, where I see so much potential for revenues and profitability improvement. Now let me explain why we acquired this company now. As you know, we are the market leaders in India, and this acquisition will further strengthen our undisputed market leader in India with 35% revenue market share. Our India customer footprint is very complementary. We have around 50% share in large enterprise segment, and now with ValueFirst brings in 20% revenue in an SME segment. 40% of the ValueFirst customers are net new to us. With this acquisition, we are entering and gaining scale in 3 large markets: UAE, Saudi, and Indonesia. Our combined market share in UAE would be around 10%. So what does this mean to us? As you know, we are pretty obsessed with revenue growth, profitability, and free cash flows. Our consolidated revenues for FY23 is around 4,000 crores. Going forward, we will build on this and become bigger and larger and better. We have acquired a business operating at 5% EBITDA. We exited FY23 with a standalone EBITDA margin of 20%. But with this acquisition, it will move to around 18%. Our plan is to mitigate this impact by improving the ValueFirst EBITDA from current levels of around 5% to double digits in the next 2 to 3 quarters. We have a solid plan. With our 35% plus market share, we have a very strong bargaining power on sourcing cost, and we have identified our other synergies to help improve the overall EBITDA margins. Why am I so confident? We have an incredible track record. We bought Carex from Blackstone 4 years ago and seen EBITDA grow from around 25 crores to almost 500 crores in the last 4 years. The same team which delivered the value at Carex will work with ValueFirst team to unlock the value of our shareholders.
Got it. Uday, you've helped us understand a lot of things, but just for the benefit of our viewers, let me put forth some numbers. The acquired company has revenues of 950 crore, but the incremental revenues to Tanla will be only 650 crore because ValueFirst already was a client of Tanla. You had a relationship, so there was some overlap in revenue. So the incremental revenues are 650 crore for Tanla. Secondly, the acquired company has margins of just 5%. 50 crore is the EBITDA on a revenue base of 950 crore rupees. But this is significantly lower than Tanla's reported margins of nearly 20% in FY23. you're confident that you will be able to improve ValueFirst margins to double digits from the current 5% in the next 2 to 3 quarters. So Tanla's overall EBITDA margins will come down to 18% in FY24. Is that correct?
Not really.
Or does it go? Okay. What would Tanla's margins be then in FY24?
As I told you, we may begin with 18% EBITDA margin at a console level, but our intent is to push to 20% as soon as possible.
And what is as soon as possible?
Definitely in the next 3 quarters, 2 to 3 quarters.
Okay. Mr. Reddy, I'm just sort of pulling back. That's the margin picture that you've given us and for the company as a whole. I think the market's issue has been the lack of revenue growth. I mean, the last quarter, if we look at Q4, there was a decline of around 4%. Even if I look at the year as a whole, I mean, revenues have been very sluggish compared to some of the other mid-cap IT plays that we see in the market. So what is the sense? Now that you've done this one acquisition, is this the first of more to come this year? What are the levers you'll put to use to look at better revenue growth in FY24?
Yeah. So we had a bit of a headwind in Q1 of last year, but we were back to a growth environment post that. Q1 is weaker compared to Q4 due to seasonality, but this Q1 is likely to be better. In terms of pricing pressure, my view is that the worst is behind us. We talked about adding 15 new clients last quarter, and they're ramping up very, very steadily. But so overall, they're pretty confident that enterprise business, now with the acquisition of ValueFirst, this will accelerate further our growth.
So your market share now stands at 35%, right? With this acquisition?
Little more than 35%.
Little more. And what about the number 2 player? What would their market share be? Because there is consolidation taking place in the India CPaaS market. Do you see this continuing, and will this provide you pricing pressure, pricing power?
I can't really comment on my competitors, but all I can say is we have become bigger. We're the market leaders for quite some time. With this acquisition, we are more or less, we are more than 35% plus. And as I told you earlier, we have got a tremendous sourcing power now, Rima.
Okay. Since you are acquiring a client of yours, are there any approvals that you require, either from your minority shareholders?
Absolutely not, Rima. The ValueFirst is 100% owned by Twilio. We only have a business relationship with ValueFirst. Related party transaction is where there is a common ownership and there is no regulatory or the shareholder approval required for this transaction.
Got it. And you also said Q1 is better than Q4, which is typically not the case. So can you tell us what are the kind of volumes and what is leading to this pickup? Are we once again started to see increased promotional spends by some of your clients? Yeah, so this quarter is looking solid. I cannot really say beyond that, but definitely the IPL and other spends have really has helped us in Q1. Definitely this Q1 is better than we talked about adding. I mean, we also talked about adding 50 new clients last quarter, and they're ramping up very steadily. So this the Q1 of this year is looking solid.
Just to understand that, I think you did revenues of around 3,300 crores in FY23. This acquisition, the turnover, as I can see, is around 650 crores. That's FY23. So by when does the total integration happen? I mean, should we expect these numbers to reflect in your P&L by, say, the second quarter of this year?
Yes, so there are a couple of acquisitions that ValueFirst India is going to be integrated. We're going to complete the acquisition by end of June. Effectively, we're going to console ValueFirst India from Q2 onwards, and ValueFirst Middle East. It may take a bit of time. Probably we're going to add those numbers in Q3.
Okay. Got that. So I think we'll just wait by to see how the integration process continues, and we'll look forward to more conversations on this as we go ahead. Thank you very much, Mr. Reddy, for joining in. Well, that is the latest from Tanla Platforms. We do have to take a very quick break on that note. On the other side, we will discuss India's plans for market coupling in the power trading segment with Naveen Singh of Hindustan Power Exchange.